In 3 months, a lawyer in Tokyo has to finish paying back money that was stolen 12 years ago. His name is Nobuaki Kobayashi. The deadline in the court file is October 31st, 2026, and he is still holding about 34,504 Bitcoin. Near $2.2 billion belonging to people who lost it in 2014. On June 2nd, he moved 10,422 of those coins to a new wallet, and traders spent the day watching a bankruptcy lawyer's address like a weather front. To understand why paying one bill takes 12 years, you have to go back to a website that sold Magic the Gathering cards. In 2007, a programmer named Jed McCaleb bought the domain MtGox.com. The letters stood for Magic the Gathering Online Exchange, a place to trade fantasy game cards the way traders swap stocks. It ran 3 months, and he abandoned it. In July 2010, he read about a new internet currency called Bitcoin on Slashdot, decided what it lacked was a market, and reopened that dead domain as a Bitcoin exchange on July 18, 2010. In March 2011, 8 months later, he sold it to a French developer in Tokyo named Marc Carpelet and walked away. That timing saved him. McCaleb lost around $50,000 when MtGox died. Forbes now puts his fortune at $3.9 billion. Asked years later about handing the company over, he said, "I definitely could have found someone other than Mark to take it over. I think that's like the #1 thing." On June 19, 2011, someone got into the computer of an auditor with access to MtGox and dumped 2,609 coins that were not theirs, driving the price from $16.85 to 1 cent in minutes. MtGox reversed the trades and carried on, and that became the accepted story. Hacked in 2011, recovered. Hacked catastrophically in 2014. It is wrong. According to the indictment American prosecutors filed in 2023, attackers reached MtGox's wallet server in September 2011, 3 months after the break-in everyone was still discussing, and stayed until May 2014. Which raises the question this story turns on. How do you bleed several 100,000 Bitcoin and still look solvent? In 2011, to prove it was good for the money, MtGox moved 424,242 Bitcoin between its own wallets, in public, on the blockchain, for anyone to check. The man who eventually checked was Kim Nilsson, a Swedish researcher in Tokyo whose own money was trapped inside the exchange. His firm, WizSec, rebuilt MtGox's history from the chain and set 2 lines beside each other, what it should have held and what it did. The report says it plainly. As early as August 2011, we are seeing a small discrepancy between expected holdings and actual holdings, which, by the end of that year, has rapidly grown to several 100,000 BTC. Coins were leaving the hot wallet, the pot kept online so customers can withdraw instantly, while fresh deposits covered the withdrawals going out. The vault drained and the till kept ringing. Nilsson's verdict? MtGox was technically insolvent since at least 2012. Now hold that against what MtGox was in 2013. From April that year into early 2014, it handled more than 70% of all Bitcoin transactions on Earth, around 150,000 Bitcoin a day in May alone. And Nilsson's data says this. By the middle of 2013, there are practically no spendable Bitcoins left at all in MtGox. 70% of the world's Bitcoin trade was running through a company whose vault was already empty. The charts on the news, The price people argued about, the number that made Bitcoin famous, all of it set inside a market trading coins that were largely no longer there. Not a bank run. An empty bank, still open, still quoting prices. And none of it was hidden.
On April 18, 2013, at 10:27 in the morning, a Bitcoin talk user called Levino opened a thread titled MtGox Withdrawal Delays. His euro withdrawal, he wrote, had been confirmed for 14 days. That thread ran to 347 pages and 909,268 views, 10 months before the exchange froze Bitcoin withdrawals. On July 17, 2013, Roger Ver, one of Bitcoin's best-known early investors, filmed a video inside the MtGox office saying the exchange was solid and the banks were the problem. 7 months later, there was no exchange. February 7, 2014, MtGox posts, "We apologize for the extremely short notice, but as of now, all Bitcoin withdrawals will be paused." Bitcoin drops about 20% that day. That is the morning its customers learned what they actually owned. Not coins. A row in MtGox's database and a promise to honor it with coins held somewhere else. On February 10th, the company named a culprit. A bug in the Bitcoin software makes it possible for someone to use the Bitcoin network to alter transaction details. 2 researchers at ETH Zurich, Christian Decker and Roger Wattenhofer, measured that bug across the network. MtGox blamed it for 750,000 coins. The most the two could attribute to it was 386, worth around $203,000. A gap of 1,900 to 1. February 23rd, Carpelle resigns from the Bitcoin Foundation board, and every tweet on MtGox's account is deleted. February 24th, trading halts, and MtGox.com becomes a blank white page. The world learned the size of the hole from a leak. A 12-page internal file called the Crisis Strategy Draft reached a blogger, Ryan Selkis, who published it. 744,408 Bitcoin, skimmed by unknown third parties. Carpelle confirmed it was genuine. 3 days after the site went dark, a user named Substar posted that a withdrawal of about 1 million yen had finally landed. "I had written this money off as gone forever, so I'm understandably pretty happy to see it in my account. I wanted to share to let people know that the Gox news is not all bad." He wrote that 1 day before MtGox filed for civil rehabilitation at the Tokyo District Court, 750,000 customer Bitcoin and 100,000 of its own, about 7% of every Bitcoin then in existence, roughly $473 million. Carpelle bowed to the cameras and called it a weakness in our system. 3 weeks later, 199,999.99 Bitcoin turned up in an old wallet, cutting the net loss to about 650,000 coins. Nobody has ever been convicted of taking those coins. Carpelle was arrested in August 2015. In March 2019, a Tokyo court convicted him of falsifying records, of inflating the company's holdings by $33.5 million, acquitted him of embezzlement, and gave him 30 months suspended for 4 years. Days served over the missing Bitcoin, 0. Nielsen reached the thieves before the prosecutors did. In 2017, WizSec traced the stolen coins to BTC-E, run by Alexander Vinnick.
In 2023, the Justice Department charged 2 Russians, Alexei Bilyuchenko and Alexander Werner, with taking about 647,000 Bitcoin in that September 2011 breach. Both are in Russia. Neither has stood trial. Vinnick pleaded guilty to money laundering conspiracy in May 2024, and in February 2025, the United States released him in a prisoner swap.
He flew home to Moscow, which leaves the bill in Tokyo. Part of why it took 12 years is a lawsuit. In 2013, a Seattle company called CoinLab sued MtGox for $75 million. Then, after the collapse, raised that claim to $16 billion, more than 200 times its own suit. Repayments froze until a deal in January 2021 got the process moving. The other reason changed everything. In June 2018, the case was converted from bankruptcy into civil rehabilitation. Under bankruptcy, creditors would have been repaid what their coins were worth in 2014. Under rehabilitation, they could be repaid in Bitcoin itself. Bitcoin did not stay at $418. The 850,000 coins worth roughly $473 million when they vanished would be worth near $55 billion at the price in late July 2026, about 117 times over. One procedural change in a Tokyo courtroom turned the largest theft in crypto into the strangest windfall in it. Repayments began on July 5, 2024. By March 2025, about 19,500 of the 23,858 approved creditors had been paid. And on October 27, 2025, 4 days before the previous deadline ran out, the trustee pushed it back again to October 31, 2026. Here is the part worth arguing about. Everything that mattered was public. The gap between MtGox's claims and its actual addresses sat on the blockchain from August 2011, and the complaints sat on a forum 909,268 people opened. It took one outsider with his own money trapped inside to read it, which makes the creditors still waiting on Kobayashi either the victims of crypto's biggest failure of trust or its luckiest survivors. If you want the same anatomy one layer down, watch our film on Poolin, the mining pool that held other people's coins and decided they should work.